Beyond Earth, our orbital data centers the key to SpaceX's trillion-dollar valuation. SpaceX is reportedly preparing for a massive financial milestone. According to recent reports, the company has filed confidential paperwork for an initial public offering, IPO, that could see it raising $75 billion at a staggering $1.75 trillion valuation. To justify such a monumental price tag, CEO Elon Musk is pointing toward a frontier that sounds like science fiction: orbital data centers. While the concept remains unproven, it represents a strategic shift in how the world's most ambitious tech leaders view the intersection of space and computing power. The logic behind moving data to space. The push for space-based computing isn't just about futuristic branding. It is a response to growing friction on Earth. As the demand for AI and massive computational power explodes, the traditional way of building data centers is hitting significant roadblocks: social and regulatory opposition. Across the globe, communities are increasingly pushing back against the construction of massive terrestrial data centers due to land use, noise, and resource consumption. The red tape factor. Building on Earth involves navigating complex zoning laws, environmental regulations, and local political resistance. The space advantage. As industry experts note, the engineering and physics challenges of operating in orbit may actually be easier to solve than the social and political challenges of building on the ground. A new space race. Starlink versus the world. SpaceX is not alone in this pursuit. We are witnessing a next-generation competition that mirrors the satellite wars of the past decade, but with a much higher stakes: compute capacity. SpaceX, leveraging the existing Starlink infrastructure to evolve into a space-based computing powerhouse. Amazon and AMP. Blue Origin. Jeff Bezos's companies are positioning themselves to compete in the low Earth orbit (LEO) satellite market, aiming to provide similar connectivity and computing services. Specialized startups. New players, such as the Y Combinator-backed startup, StarCloud, which recently achieved unicorn status after a $170 million raise, are specifically targeting this niche. Strategic value versus technical reality. While the vision is grand, analysts suggest we should view orbital data centers through two different lenses: investor sentiment and operational utility. The grand vision strategy for Musk, selling a future-proof vision, is a proven tactic. By pitching orbital data centers, he shifts the investor conversation away from current profit margins and toward a limitless future. It signals that SpaceX is not just a rocket company, but a fundamental pillar of the future's digital infrastructure. The vertical integration advantage. Unlike its competitors, SpaceX possesses a unique economic advantage. They own the trucks. If SpaceX builds data centers in space, they are also the ones getting paid to launch the satellites required to build them. This creates a self-sustaining loop of revenue. More data centers require more launches, which further inflates the company's valuation. The reality check. Despite the hype, there are significant caveats. Experts point out that orbital computing is unlikely to replace Earth-based data centers. Rather, it will serve as a specialized supplement. Furthermore, the massive capital expenditure required is immense. And if the demand for massive AI compute clusters fluctuates, the momentum behind these crazy projects could stall. Conclusion: orbital data centers represent a high-stakes gamble to bypass Earth's regulatory hurdles and create a new market for space-based computing. Whether this proves to be a viable industry or a brilliant piece of investor storytelling, it is clearly set to define the next era of the space economy.